Yeah, I will address these at a high level, and the question really is about the Chinese Communist Party. And I understand. Look, there are political risks affiliated with these types of opportunities. I our assessment is that the probability of them sort of socializing this firm or turning it into some sort of utility is very unlikely. And for those who don't know, NASPERS owns a lot of Tencent. NASPERS and PROSUS own 28.9% of Tencent. And NASPERS is selling for a massive discount to the valuation of the Tencent shares. And then the Tencent business has a lot of potential, but the stock has not been performing well over the last year, particularly due to all these political concerns. You know, I lived in China a lot of years ago, and I sort of understand it's very different than the American approach, and it's capitalism with Chinese characteristics. I don't think it would do China. It will not benefit China to start ruining the golden goose within their economy. They have a few very strong businesses, and of course they are clamping down in certain areas, but we really expect that these businesses will continue to thrive. I mean, Tencent is going to become one of the global providers of all sorts of services, including the various cloud-based services, and it's a very strong company. The political risks are there. If we see things happening, I have Test's account with real capital inside. We do things like buy and sell contracts and own stock of DD to see what happens during delistings. We're looking actively and monitoring all of this very closely. And it's a risk. Everything has a risk, but I don't think they're just going to completely squash Tencent out of existence. It's a great firm. It's a growing business, and we're able to get shares through the NASPERS exposure at a huge discount. I think we'll see that we do quite well over the next 3 to 5 years.